Alright guys, here's my analysis for January 19th, 2024. That was Friday. So before we get into the charts, I want to go over really quick how price fluctuates up and down in a fair auction marketplace. So for an example, in order for price to move up or down, you need to wipe out the layer of passive sellers or buyers. So for an example, right here we're going to be at price 279775, and we want price to go up to 2798. Right here, we need aggressive buyers to hit the ask, because this is the ask, but we need to hit the ask, hit it 524 times to take control now of 2798. And the same thing for 279825, we would need to hit it now 941 times to take control of this price, and so on and so forth. So that would be the same now. Let's say our price would be 279775, and we wanted the price to go down. We need to hit the bid 375 times to bring the price down to 279750, and then so on and so forth until we would have to hit it 971 times if we want the price to come here, and so on and so forth. So we're going to get back to that, but really quick, that should help contextually for what I'm about to show you. So before we now get into the charts, one last thing. I want to show you what this footprint means. So there's 3 layers. You don't have to worry about the right layer. So the middle is the volume. This is all the volume, this middle piece right here. So you got the volume, and then you have your delta, which shows which side is stronger at the current price levels over here. So for an example, we have a volume of 158, and out of those 158 transactions, 114, because it's a positive number, 114 were aggressive buyers, more. So for 506 transactions, negative 50, which means aggressive sellers, negative 50. So out of 506, negative 50 more were aggressive sellers. One last time, you have a transaction of 305. Out of those 305, 151 were aggressive buyers. So that just helps you gauge which side is stronger at the current price. So we're gonna get started right here. So pretty much contextually, everything was just, we were rallying up, we were nothing crazy. I didn't see anything, I didn't take any trades yet, and then you play it. All of a sudden, I want you to keep an eye on this price level right here at 4835. You can see right here, out of 720, look at all this aggressive buying, 777, 800. We're just climbing right here. Somebody is hitting, like I said, hitting the ask right now, because this is aggressive. They're aggressively buying, yet we're not moving up. Now, if we're not moving up, that means there has to be somebody on the other side, because like I showed you right here, there has to be somebody on the ask willing to sell to them for 1,000. And do we see? If we look on the ask at 4835, do we see? This is too big, but do we see 1,000 people willing to sell to stop the price from moving up to 483525? No, we don't see that. So that brings up another argument, which is going to be, what is this? And in my opinion, it's an iceberg order. So what is an iceberg? So I'm gonna circle some key takeaways right here. So iceberg orders are large orders that are split up into lots or small size limit orders. They're split into visible and hidden parts, with the latter transitioning to visibility after the former type of the order is executed, and they're placed by large institutional investors to avoid disrupting trading markets with a single large order. Because if this guy wanted to hit the ask for 1,000 lots, this is immediately just gonna rip through all of these right over here and probably the price is going to just get thrown all the way to 48.37, causing an imbalance somewhere around there. And that's not happening. So that means somebody's willing to sell to him at 48.35. I believe it's an iceberg order. We're going to get into what an iceberg is deeper soon. But right here, I see it, and this is not natural at all. So let's keep watching. So that happens, and then I pull up my heat map so we can see it. So you can see it right here. And then 4,000. Look at that. So let me pause it really quick. Out of 4,867 transactions, 4,547 were aggressive buying. Yet we did not move up barely at all. Barely. So now this is a level you want to keep your eye on. I believe I ended up taking it long here after a few tests of the level because we were holding. Let's see. But keep watching this level. Yeah, I took it long. I ended up taking it long because we were holding it. And ended up losing the position 5,000. Look at that. All of that aggressive buying, yet we're not moving higher or lower, but we are holding the level. Now watch what happens here. So I stop out. But we get a strong rip to the downside. Look at all that aggressive selling. Then all of a sudden we start selling off. Now remember how this guy just aggressively bought, or at least I think he aggressively bought at 4835. Now we're starting to sell off. But why are we not moving down fast if we're selling off this many lots? Look at how much we're selling. 300 lots here, 200, 300, 400, 300. This is over thousands of lots right here, yet we're not selling off hard. You could even see that we're selling off harder than what is on the bid, yet we're not wiping through it. And it's because this guy, in my opinion, according to my analysis, is now he is sitting on the bid and he is accumulating all these people that he's trapping short. He's sucking in all of their lot size. So right now, I'm on the sidelines. I'm seeing this in real time, and I'm like, yeah, I'm not entering this short. It's trapping a lot of people. Probably looks really good short if you're just looking at a candlestick chart. I bet it's probably going to whipsaw up or something's going to happen. And you can just see all this absorption. Look at all this absorption right here. So fast forward. Still holding it. And we're here for a good amount of time. Like, look at that. We're just selling off. Look at all this, but we're not going anywhere. Look at these massive aggressive selling bubbles. Just slamming the bid, yet we're not going anywhere. It's because this guy is sucking everything up on the other opposing side, and he's hiding his size. So right now I'm standing by. I don't know where I want to enter, or even if I want to enter in this, because technically I still don't know if this guy just got into a short position or not. But this does not look real at all. So even more fast forward and we start climbing up. What is that going to do when we start climbing up? That's going to put everybody all these retail traders who just got short, that's going to put them in fear, and it's going to cause them to stop out. How do you stop out of a short position? You have to cover the position with the buy. So now that's just going to rally this up again. And this guy's just sucking up their stop outs even more because it's a buy order. He wants that. He's sucking them up. And watch this. Watch what happens. keep going, but we're still holding this. Look at the cumulative delta right here. We should be selling off with all of this pressure, and we're not. So something here is extremely, extremely wrong. Look at all this red, and we're going nowhere. Once again, to print it in your brain, look at this. We're going nowhere. He's sucking everything up. We're in this range for a good 20 minutes. He's accumulating everything. Still going. Still going. And then, watch this. We go back up. And look, oh yeah, 1,300 lots. Hits the ask. Were there that many people? If you rewind the video on the ask, I can assure you there was not. That's where the iceberg order comes into. So say, really quick, what an iceberg order is. Say this guy, you can only see 123 here, but he's going to keep reloading it to not let it go higher. So you can only see 123 here, but say he really just he has 2,000. Maybe when this gets to 50, he's going to reload it another 100 to make 150. And then when that gets to 50, he's going to reload it again. So it only looks like it's 100, but really he keeps reloading it to get his orders filled. A lot of dirty games the institutions play. But okay, so has an interest in 4835. He averaged down his whole position. This guy. I'm still sitting on the sidelines. I'm down, I believe, like a point on the day. And then we start ripping to the upside again. And guess what? He's probably going to trap more traders. Or maybe not. I don't know. Let's see. Well, we start going underwater again. Now look at this. What's about to happen right here? Look at that sweep. This right here made me go long bias immediately on this sweep right here, and how he just got into 2,100 more lots. It wouldn't make sense if he was getting into a short position to keep adding to his position at a higher price, because if he was short, it would be higher. The lower the price, the higher it would be, and more expensive for him. He would have been getting in higher up here if he was short. So if he was long, he's averaging down for a better price. So right there, now I'm like, okay, this probably was a good entrance long, hindsight. But now we just start climbing up, and all those people that got short again over here, they're in pain. They're about to be in pain. They're going to be slamming their buy market button to get out of that position. And guess who's buying that? Him. He's taking it. And then watch what happens. We just start ripping. Look at all these people stopping out over here. All the people that went short. All these retail traders looking at the candlestick chart. Not looking at order flow. Look at this. And then he's ready to take the market higher. He accumulated everything. Look at all this accumulation over here. I want to say over maybe 10,000 lots this guy accumulated. And we're ready to go. He starts ripping. We start breaking out. I'm not in a trade yet. I don't want to get faked out. Like right now I'm talking hindsight, but in the moment I don't want to get stopped out. I need to see what's going to happen here. If we can retest this 3-5 range, I'll take it long. That's what I was saying. But we start ripping. Look at that. Look what happens. And we're holding it. We're holding it. We're bidding up above it. But so I said if it enters in here, I would like to enter. I'll enter long. And then watch what happens right here. I want you guys to see what happens. Because this is straight market manipulation right here. Watch this. There was no news at this time. Watch this. What the hell was that? Look at that low volume tail. This is straight manipulation. Look at these zero prints up here. Look at this. Look at all that low volume. Like, look at the order flow. People are probably profit taking up here right now. That's why you see that, but it's holding. We are holding. And then I'm like, all right, I'm willing to take it long if I see anything on the tape telling me to, or we come back down into this range. But I can't chase this at this point because I don't know where to put my stop loss. And then a little bit of this happens, holding it, but we're starting to work our way down. They're aggressively starting to step in. It's probably profit taking because I don't think a lot of people expected that. And then I start to let's see, right here we come back down into this range and watch what happens. Watch this. Just rip down, and all of a sudden we start hitting the ask again. Do you see that many people on the ask? 862 to just stay at that price? No, you don't, because it's an iceberg order. And please, I'm going to leave the link in the description on what an iceberg order is. I would like everybody to read that if you don't know what it is. Look at that. He gets in right here. Now I'm like, all right, if we can hold this, I'm going to get long. This is a good invalidation spot because he just dumped more in here. Look at this. So like, all right, let's do it. I think this is a good spot. I'll put my stop loss around the 3.9s. If we can hold this and aggressive selling, or I'm sorry, aggressive buying steps in. And then fast forward, I'm like waiting for the aggressive buying. If it steps in, look at this. Look at it reloading. This is iceberg orders. 4,000 lots. I step in right now. Aggressive selling, aggressive buying steps in. I'm in. Put my stop right here. But the thing that messed me up, and it's a lesson learned, is you're going to start to see low volume. We start working our way up. I'm up. We start seeing, look at all this low volume. Look at the little dots. Not many participants are getting involved in this. So I was starting to get sketched out. Like I was up a few points, like 2 points about, but I didn't know if I liked that. I didn't want to get swept on by the algorithm and then it hits my stop and then, it climbs up. So I was getting sketched out with this, and I'm not going to lie, I regret it now, but lesson learned to trust your plan and let your stop loss invalidate your thesis. Not you and your emotions. I got a little bit too emotional. And it started to look like it was selling off. And then I was about to cut my trade. I was up, I think, a point. But I just did not like that low volume and that little sell-off that just happened. I end up cutting my trade around here. I cut my trade. Got a 1 point winner. Pretty much break even. And then market starts on ripping up. So let me show you right here. You already know what happened. Obviously, this guy accumulated over here. Accumulated, that happened. Started ripping up. Low volume tail. Right here, I got in. Right here. And look at that. Look at this. Oh my god. Imagine I would have held that position. It's all good though. It's alright. Lesson learned. And then he just starts distributing. He accumulated all the way down here, like straight up Wyckoff method right here. Accumulated, marked it up, distributed. I'm assuming he distributed, and just for fun, if this guy actually distributed all the way up there, because I believe I counted already, so I'm just gonna say he accumulated 13,000 lots in this span, plus the little one up here, the 4,000 one up here. So let's say 14,000 lots he accumulated, this guy, and each point is $50 each lot. So 14,000 times 50. So for every point, this institution is gonna either make or lose $700,000, and this thing ripped. Remember, 700,000. Let's just say 4835 to. Let's just say he dumped his shares here, right? Who knows? 4873. He dumped them. 700,000. 4873 minus 3835. That may be the wrong way, but no, 38 points he made. 700,000 times. This guy just made today 26.6 million. So that's what happens when you read the tape. We would have been on the right side if we didn't just self-select ourselves. So lesson learned. Don't let your emotions dictate anything. Thank you.